The first key point is that it's been a market issue rather than an economic issue, and we can't stress that enough. So, we really haven't seen any impact from this on the real economy to date, and we're not really expecting to.
Something far more important than MSCI's inclusion of A shares will come under the microscope, and that is whether or not the RMB joins the IMF's SDR. I think it probably will. I think the Americans have been rather wrong-footed by the politics of the setup of the Asian Infrastructure Investment Bank and the One Belt, One Road policy, and will probably not want to see China staying outside the SDR. And that brings with it another important step forward in terms of the reform of the financial system. Then I think that whether or not MSCI put them in or not, A shares in, interest in Chinese assets will rise, not fall anyway.
We do believe that the fundamentals are stabilising, and ultimately fundamentals will end up driving, share prices. And if those fundamentals do continue to stabilise and then ultimately show signs of improvement, and if we see the same, rigour with reform that we've seen from the government and the central bank, if you see that continue, we think there's going to be some really, really interesting opportunities still to be found in the A share market. But having said that, as you mentioned, we have been, in more recent times, focusing on the H share market because there have been better valuation opportunities, given the discount that some of those stocks have been trading relative to their, to the A share.